Welcome to our webinar on NFP strategies. Thank you for being here. It's a great pleasure of mine and Tarantula.
Hey, hello everyone. Yeah, it's really been a great pleasure, and I'm really looking forward to explain you this. This will be a very interesting webinar.
Definitely. We both are looking forward to diving into NFP strategies. So let me quickly start this PowerPoint. But before we start, as you all know, the risk disclosure statement, please be aware that trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and also be aware that this webinar is for educational purposes only. All right, so please go through the entire statement, and if it's a bit too fast, then just send an email to our customer service and they'll get back to you with this statement. All right, so thanks for the attention. Welcome once again to another webinar hosted by Admiral Markets. And as we say, week in, week out, excuse me, take a look at the platform. We've got many advantages going on, so I think you'll definitely find a few of them that will be great advantage for you too. All right, today's goal, a guide on how any trader can trade NFP. We'll be taking a look just quickly the background of what is NFP, then looking at the pros and cons, and then some trading strategies. I'm sure that everyone is looking forward to, especially the last one, but we'll just dive into quickly to give everyone a background of what it is. So maybe just a quick question for you, so we have an idea how our audience is viewing the NFP. For example, do you trade during the NFP days, or are you actually avoiding it on purpose? And maybe if you give an answer to that, you can add what kind of trader you usually are, so we have an idea. All right. And now Tarantula will give you a background. What is NFP? Tarantula?
Yeah, but I'm waiting for input.
You want to wait first?
I would like to know if our traders do they trade NFP, or maybe they avoid it during the news release. I don't know. It would be really interesting to know. But if you don't get any feedback, I can.
Yeah, we do. It's good you waited indeed. Dusan says he trades various economic releases.
Yeah, but the NFP has been very volatile. It's not as it was maybe 2 years ago, but it's okay to trade it.
Yeah, it has changed. Manfred tends to avoid it, but he does trade.
Well, today, guys and girls, all traders, today we will present you how to effectively trade NFP strategy. But before we can start doing research on our good and approved strategies, I need to explain you basically what is NFP, what does it mean, how can influence our trading and our trading opportunities. Basically, NFP, it means a non-farm payroll. And that is basically a statistic research and recorded and reported by the U.S. Bureau of Labor Statistics. And it represents the total number of paid U.S. workers of any business, but excluding the following employees. And those are general government employees, private household employees, employees of non-profit organizations, and farm employees. And basically, it includes estimates on the average work per week and the average weekly earnings of all non-farm employees. And that report, it tended to be very volatile. Today, it is volatile, but not as volatile as it was maybe 2 years ago. But the structure remains the same. It is monthly report, and it goes live every Friday, first Friday of the month. Preceding NFP, we have ADP, and usually ADP report precedes, basically it gives some insight to what NFP would be. But I think that non-farm payroll is really, I don't know, one of most important data releases, especially that really gives us cues for maybe following weeks or following, I don't know, I cannot say months, but weeks for sure. And we will see on our example how it was for last NFP. We get good NFP results, and as we can see, the trend is bullish. So Chris, do you have anything to add?
No, I guess we could just continue with the explanation that apparently, according to statistics, just quickly, the NFP does account for like 80% of the workers who produce the GDP, so substantial part there. And generally speaking, government policymakers and economists, they use the information to have an indication of what could happen with the economy in the future. And you could look at it in two ways. Of course, if the NFP is expanding, which means that there are more jobs being created, that's a good sign of economic growth. Of course, if it's decreasing, then that's a slack of economic growth or non-growth, and we're in a recession, so no jobs are being created. And one of the things that could happen, though, if this NFP is really high, then there could be maybe a effect of later on of inflation. And how do we interpret that? Well, basically what fundamental traders, I and Untitled are technical traders, but fundamental traders will be looking at the difference between what is the actual number and what is estimated. And if there's a substantial difference between the two, maybe they compare it to the previous as well. Don't know about that. Maybe that's also part of it. Then if there's a substantial difference, then they would trade it one or the other way. So that's very important. And generally speaking, if the data is lower, so there are less jobs created, that means that less jobs means less chance of inflation, which means that interest rates will not necessarily rise anytime soon. And if the interest rates do not rise, that means actually it's bad for the dollar. And the opposite is true if the jobs are created. That should lead eventually to inflation, which means that interest rates will go up to counter the inflation. And if interest rates go up, then there's more demand for the currency. Let's just take a look at the Aussie, for example. It has relatively high interest rates compared to the US, the euro, the pound. And you can see that, relatively speaking, it has also been in demand for the last 30 years. If you look at the euro odd, you see a huge downtrend. So part of that could be explained by this interest rate. All right, so here's a quick idea of a release. I cut off actually this is just the number. I think this is also the expected, I think here. Then there should be actual and expected. I cut it off by accident, but
I think it was lower than expected on last NFP. This 88K was really bad. It is a low. It was a really bad number for USD, and unemployment rate was also, I think, lower than expected, and it created basically an uptrend on Euro USD for this month.
Yeah, exactly. That was a very low one indeed, 88K here above.
It was basically risk-on sentiment.
Yeah. Oh, you can see actually here on the very right, expected and the actual, because the yellow stripe is the expected.
Yeah.
And here was the actual, the blue bar. So it was way under. The month before was a bit above, as you can see. So this dates back all the way to 2000, and of course here there was a huge crisis and a big dip. All right. Not only interest rates actually, of course, influence it. There are other factors like trade balance. Nowadays, also quantitative easing. This is actually a slide that dates back from summer 2012 and shows when quantitative easing was introduced in the U.S. And it had a big effect on the euro-dollar upside. When they stopped, downside. when they started the second program and ended the second program. So you can see there's also definitely influence, potential influence anyhow. It seems to correspond to some movement of the euro-dollar in any case. So besides unemployment.
Yeah, now we can speak about what are the advantages and what are disadvantages, pros and cons of NFP trading. Now we are slowly getting down to our business. Now we explained you a bit of theory behind NFP, and now we will talk about really strict and specific stuff about how you should trade NFP and why you should trade, or maybe you shouldn't trade NFP. The first advantage, and it can be also a disadvantage, it depends what sort of trader you are. If you remember, we talked about fear in trading, we talked about money management, and now when you sum it all up, you shouldn't be feared, and you should maybe give NFP a chance to trade if you are basically, if you're not afraid, or if you know how to manage with your money. So the first advantage, it's very volatile. We can exploit fake outs, and we can see how we basically do that, because we don't enter on first spike. The third advantage is it can be very profitable, because it's a spike. Basically, it's a spike trading, and we don't wait for too long. I will explain that, how we trade it. It can really be very profitable, and the advantage is it may give us a cue of prevailing trend of next, or maybe a next trend. If you remember, last NFP result was really lower than expected. It was worse than expected, and the trend shifted to bullish on Euro USD pair. It was basically a risk on sentiment, which boosted Euro strength, and now as we are getting close to end of the month, and if you can see, you probably saw it again, it's a correction and Euro starts falling again. So on next NFP, probably we will see prevailing trend for that month. So it's really a good indication of dollar strength or dollar weakness. And based on that, we base our maybe sentiment. And now we have disadvantages. Yeah, we will show you some disadvantages why you shouldn't trade it, because maybe it's very volatile for you. It's an advantage, and in the same time it's also a disadvantage, because maybe you don't know how to trade it. You are afraid of whipsaws. You're afraid maybe of those spike movements, and because of that, risks are very high. They're very big initial whipsaws. And what I assume by initial whipsaws, I assume it when the price violently turns up and down. And basically, it looks like there are no levels to protect the price. Price can swing up in a minute, then it can swing down, and then in next hour it can rise a bit, then it can tank a bit. So we are not sure where it goes. And because of that, we always trade NFP on 1 minute time frame. We will see later how we do it. You should know that risks are very high, really, and there are a lot of irrational movements behind that news release. And the release of NFP generally occurs on the first Friday of every month. I think it's 12:30 our time, it's Central Time, it's 1:30 GMT, and it's 8:30 AM Eastern Standard Time. And basically, this news it creates a favorable environment for active traders, and it provides a near guarantee of a tradable move following the announcement. But you know, with all aspects of trading, whether we make money on it or no, it's not assured. But we need to approach it from a logical standpoint, and we have our system It's basically a trading style for NFP, but you know, being a very volatile news, risks are very high due to a lack of technical trading. Me and Chris, yeah, we are technical traders, but you know, this news is not technical trading. It's spike trading, and it's caused by orders being wiped out. Heavy money is placed in the market, and usually what happens is the stops are taken out, so it may lead to initial fake outs where the price will violently turn in opposite direction. And what happens is we are usually very afraid, and we basically lose on our trades. But following the news and following the initial spike, we can make profits. So we will explain how to do that. Chris?
Sounds very good. I'm looking forward to that.
Yeah.
And I think there are basically two different ways of looking at it. One is indeed the method that Tarantula just mentioned. We'll take a look at that in a sec. Take a look at the 1 minute, basically, smaller time frames. The other way is also a good indication for maybe a bit more of a swing or precision trader, for example. We'll dive into that as well. If you're more of an intraday trader and you're using 60-minute, 30, or 15, it could be a bit difficult to trade because of this violence and its volatility and its spikes, as we've been saying. So I know, professional day traders that don't like the very low time frames or don't like the very high time frames, and they actually stay out of the market on those days. So that's a valid option as well, to avoid trading at all on NFP, and they do something else, maybe go visit parents or play some golf, who knows, but not trading in any case. And some do also the same actually for interest days on the euro and pound actually. So it depends. You have actually then in this case probably three options we recommend, one of which is being neutral. So the NFP is important for swing and position traders because it is often enough, in a way, a game changer, or could be. It has a potential, just like we saw this month, I should say, where we saw the NFP change the euro-dollar trend from down to up. It has that tendency to end an old trend and start a new one. Sometimes, of course, it's not a fixed rule that that's always the end of the trend. It could be also just a trend continuation, but it does lead to a good indication of what could happen the next, let's say, 3 weeks or so on the currency. So this is not a specific strategy that I'll be looking at, but I want to show you a couple of screenshots, basically, that look back at I think it's a year of euro-dollar news, and I marked which NFP days are there. So it's not a specific strategy, but it's just to look at the market and get a sense of what the entire NFP day could have for an impact. And if you, or depending, it's a case-by-case situation, of course, that we'll have to look at as a swing trader. But so it's not a fixed strategy, but these are entire days, basically. So this is the end result of the NFP impact. So when everything is finished, all the ups and downs, all the stop loss takings and the spikes and then the false and the true directions, at the end of the day you do have a day candle, and once it is closed, then it could have a pretty interesting indication. So in some cases, for example, it could mean a reverse. For example, here we had a nice down move, and then we had an NFP day here, and that caused a pretty substantial retracement. Maybe here too, big bullish day, for example. Here a wick. Here was a reversal. This was a wick here at the top. This was a wick. So those are more, and this one, those are more reversal examples. I know it's a bit small, but I'll show you later on an example where we zoom into a part of the price action. So this is dating back to a year, actually, to March 2012. Then of course we have some days that are more maybe neutral or continuation. Let me mark those with maybe, I don't know, blue. No, blue is not good. How about I'll just take it off and use green again. For example, this one, it's a bit of a continuation actually, because we get some small down move. This one, continuation. Well, this one is definitely a reversal, right? This one is more of a continuation. This one is more of a continuation, right? Big uptrend already, big bullish candle, taking the currency out of that more or less rising consolidation pattern, and another 4 days of huge bullishness. This is more of a continuation, right? We're already making a down move, small retrace, continuation, and we get a bit of continuation as well. And this one is probably also in the middle of that move, right? So we were in a downtrend, continuation, and then finally here the turn. There are also, of course, euro and pound interest rates. I mentioned two of them here. This one at the bottom actually caused a huge down day. I thought it was funny, with a huge wick at the bottom. And the NFP actually then totally reversed that with a huge bullish candle, and it was upside after that, after this substantial downtrend on the euro dollar. That was actually one of the first, or this, maybe two here engulfing candles, but continuation here after a very bearish day. This one is a different example where we had euro and pound interest rates. This was actually a reversal candle, and we got a continuation on the NFP. So personally, I'm still bullish on the euro because of this. We did have, a substantial down day yesterday, but personally, I think I would tend to see this currency go to more upside. But yeah, that's besides the fact. So you can see how, in any case, these day candles might have a future predictive value when you look at just, the price action signals on this day candle. And I'll just zoom in a bit to this more zoomed in view. Now the candles are not maybe that substantial in this example, but they're still decent wicks. Not the best of signals, of course. I mean, it would have been a bit better if the wick is maybe equal to the open, for example, or just below it even. But still, it was a decent wick, and moreover, we had this huge continuation day, which signaled this actually quite nice rally down on the euro dollar to like the 127.50 area, I think, somewhere here. So that went all the way down. Before we went down, we had these 2 days here. Also another example with a 50% wick. And here, more or less, maybe a bit of a closing reverse, but moreover also the upside continuation with bullish candles in that up move. So, yeah, that's about it, I guess. Any questions maybe from our public regarding these screenshots? This is actually quite recent. This is from beginning November to beginning February, so it was something, that area I'm showing you is from here to here on the bigger time frame, by the way. It's this area, the last move, kind of the last few waves before we made the down move.
Yes, and you can use your daily data to see what the next trend or continuation of trend may be. So always try to spot a after NFP daily candle. Those are little tips and tricks which is given by you by Chris. So basically, after the NFP, wait for daily close, then spot. If you see a big wick, of course, big wick on a resistance, it would mean a selling in next few weeks or next week, and a big wick on support. It could mean, or bullish candle. It could mean a continuation or bounce of support. So always try to spot daily close after NFP. I don't think that you will have many more opportunities to hear about this, but now use this opportunity to remember and write it down. This is a pro trick. pro-elite, I would say, advice. Yeah. So
cool.
You can see the impact. You see.
Garrett is saying it would be nice to see the data of the NFPs if there's also a correlation with the reversals or the continuation. Yep, would have been that's a good thing to look at indeed. You could make a pretty nice research out of that to see, which data line up the data and the actual expected, and see what the day candle then looks like. And maybe after looking at 24 of those for 2 years, you can get a nice maybe a correlation that seems interesting to you. It's a good idea, Garrett, definitely.
Yeah. Okay, let's get down to business. We will talk about my favorite NFP strategy. And this is the strategy which I personally use if I trade NFP. This is basically, maybe this is a well-known strategy. I don't know if you have heard of it, but I will show you later on a strict example and a specific example of how I traded last NFP. So basically, what we should know is that this trading this new release can be very profitable, but it's not for the faint of the heart. And this is because we are basically speculating on the next direction on a given currency pair. What I trade usually is Euro USD, but we can also trade cable and dollar yen pair. So it is best to wait for the wild rate swings to subside. So we wait for initial pullback, then we trade it. And we can attempt to capitalize on the real market move after the stops have been wiped out. And we are basically, with this strategy, we are attempting to capture that logical movement of the market. So we will have a first example, for example, of a euro-dollar long trade, how we trade it. First, let's assume that non-farm payrolls numbers came out worse than expected. And the first thing that euro-dollar spiked up. Now remember this, then we will show you on the next slide. First, what we do is mark the range high. Then we wait for a small pullback. I will tell you the levels. And then we have two types of trades. First type of trading is to buy euro-dollar into retracement of initial spike. For on our slide, it is euro-dollar, for example, on a pullback. And this is aggressive trading, yeah. And conservative trading is to buy above high, above initial spike high. That is 32.18. And our stop loss, we know where to put it. It's below the last lower low. So there are basically two things we should pay attention to. First is the initial spike. It's our setup spike. It's basically our setup chart, how can I say. And then after the initial spike, we need to use either conservative or aggressive trade. So Chris, you can show next slide where we can see a picture of it. Then I will show you a real example of this. Okay, the first is, you can see it was a time here on our big blue candle. I call it a bully candle because it looks really bullish, and it's a bully candle. And after this bully candle, we assumed that this NFP release will go high, but we don't enter after this initial candle because it may be a fake. Assuming the number and assuming the whole market structure behind this move, we need to wait for a pullback. Now we have a long bias. Okay, we have flat top ascending triangle. You can see a rising trend line. You can see a long, we have a first spike, and now we need to wait for a retracement. Let's say this is 61.8 retracement. Okay, after the initial spike, the price starts to retrace. Yes, 61.8. We buy it here after this candle. This is 1 minute. We need to wait for the close. We buy it here, then we drive the price through. We can see the rising trend line. We don't close our trade. You can see the trend, it's going up. Then the spike came above a last higher high. We are still in the trade, and for example, after 15 to 30 pips, we close the trade. We don't have a strict target price for the move because it's a spike trading, it's a news trading. We need at least 15 pips of this. You can see this was the candle that broke to this flat top, and it's rising trend line, and then we can even add scale in this move, and now we can close it on round numbers, 32, 30, 32, 40. Those are all round numbers, and big banks, yeah, they like to go with those round numbers. And the second part of this trade, or the second way how you can trade it, is first to wait for initial spike, then to mark a swing high. Then we wait until the swing high has been broken. This green candle, which has a yellow circle on it, broke that high. We can buy into resistance because it has been broken. It's 1 minute time frame, so we don't wait for a breakout pullback continuation pattern. And after this, we place our stop loss and we wait for the price to go up in profit. So it depends what type of trader are you. If you're happy trigger trader, what you usually do is to wait until the price breaks, and we immediately enter in a particular trade. So we need to wait either for this spike high or to spike low, and after the spike has been broken, we enter the trade. That's conservative. That's very conservative type of trading. But if we are aggressive, we need to wait for the pullback, then enter. I will show you on our next example in real time what I did. Basically, this is last NFP, and it was done on, I think, 5th of April, just 30 minutes ago. Okay, first, this red line, this vertical red line, it's where NFP started. It was 2:30 Central Time, and I waited for this move. I didn't trade it before because I don't like to trade before the actual news release. This is 1 minute time frame, and I waited for the initial spike. 1, 2, 3, 4, 5 minutes. After 5 minutes, the price has made its spike. This is swing high. You can see it after 5 minutes. We have a swing high, and now, based on risk on sentiment, I saw that dollar was really in bad shape, and that report came a lot worse, really a lot worse than expected. We need to place always a deviation. If deviation is not very big, then we don't trade it. But this is really important. If deviation is big, then we trade NFP. And if deviation from expected to actual release is not that big, we don't trade it. So we need to see that deviation. We need to hear market sentiment. And what happened is, after this swing high, I knew I was going to long it. So I waited for a pullback. This pullback was to 78.6 fib extension. But I waited for this candle to close. It closed on 50 retracement, and I entered the trade. I could also maybe enter on when the candle didn't close. Maybe I could have entered on a running candle because it touched 78.6. the best entry on NFP you could ever have is to, after the price has made initial spike, you made your fib extend, your fib retracement, and you wait for 78.6. So after this, go to your platform, enter 78.6, go to NFP trading days, put it on 1 minute time frame, and just watch the initial reaction to 78.6 fib retracement. And then I entered on 50 because I waited for the candle to close. But I'm telling you again, I could easily wait on 78.6 and enter on a live candle. So after this candle close, the price went in opposite direction, but we know where to put our stops. It retested the lower low, and then it continued to go higher. So it was good 15 pips out of this trade. I could have made more, but I closed after some 15 pips. But also, I could have added on this conservative entry after the price has broken the initial high. So I could have added, I could have scaled in. So I would have made double profit. This is aggressive entry. And when I do NFP, I do these aggressive entries. But also, I was telling you about conservative entries. So first you mark the first swing high, then it goes to retracement. You put the red line on that swing high. You wait for the price to break that swing high. You enter on like buying into resistance. And then you see the price went up. It had a little bit of retracement, then it went up. So basically those are two types of trading that I prefer to do. Let me say this again. First, you need to mark when NFP starts. This is your first thing to do, the red vertical line. This is the candle. You need to open 1 minute time frame exclusively. Don't trade NFP on bigger time frames. Yes, 1 minute time frame. That is rule number 2. The next thing is you wait for initial spike. The initial spike here, it's a big candle. This spike, you can see this spike high. Now we know that we will make a long entry. This is rule number 3. Wait for initial spike. After the initial spike went off, we draw our fib retracement from left to the right, from the lowest low just before NFP to the highest high after the NFP release. This is, you need to be very nimble, you need to be very fast. And this is the retracement. You can see after this high, we wait for the price to pull back at least to 50% of the fib. This is rule number 4, right? Number 5, yeah. Wait for the price to pull back to 50% of the fib at least. Then you can make a trigger happy trade, enter on a live candle, or you can enter on a close of the candle. The best thing is to wait for 78.6. This is the best entry you can ever have. 78.6. You can see the spike of this aggressive entry came down to 78.6, and you see, it jumped off. This was, yeah, 78.6. So you need to wait for the retracement, then you make your entry. Put your stops below last swing low on 1 minute time frame. So in this example, we put our stop loss just below those two candles, which gave us, well, it's a double bottom, yeah. Stop loss at least 3 to 5 pips below it, because NFP can be very volatile. I suggest 5 pips below, and go for 15 to 30 pips of profit. go for 15 to 30 pips of profit. If during the initial maybe 20 minutes after the initial spike nothing is happening, then you cancel your trade, you don't trade. The best thing is to wait for, you can see 1, 2, 3, 4, 5 to 10 minutes after the initial spike. Well, maybe the 5 is the best, but wait for 5 to 10 minutes, then you trade it. If there is no initial spike, you don't trade it. We need deviation, guys. We need to see deviation. Yeah. We need to wait for retracement and then we enter. Or if you want to make conservative entry, wait until the candle has broken last swing high for buy trades or last swing low for short trades. Basically, it was the initial spike. So conservative entries are based or broken initial spike. So if the initial spike is broken, then you trade it. That is basically a conservative entry. But if you want to trade aggressively, as I do, then you will wait for a pullback, then you enter your trade. So this is my favorite way to trade NFP. And yeah, I have really good success in trading NFP last couple of months. So what I do is really first wait for deviation. If deviation is big enough, then we have already established our how can I say bias toward maybe some movement after the initial spike. We need to see the numbers, and then after the initial spike, we wait for either the retracement or to break of that initial spike. Then we enter the trade. 15 to 30 pips is target price. Stop losses put below last swing low or swing high, and we are safe to trade it. 1 minute is exclusive time frame for NFP releases. So that have you anything to add, Chris? Do you have anything to add? Yeah, this is I hope yeah. Do you hear me, guys? I don't have the sound here, but
sorry, yeah. So, no.
Sorry,
the problem was the sun is shining on my screen.
No,
the problem is the sun is shining on the screen, and I wanted to you said, like, do you have anything to add? And I wanted to say something, but I was muted. I couldn't see my cursor. I was looking for the cursor. No problem. And I was looking for my cursor, to unmute myself, but because of the sun shining on my screen, I couldn't. So I was like, very annoying.
At least we have sun here now. It's not cold anymore. We have spring, beautiful days. This will affect your trading. You will see beautiful days here in Serbia, and I hope beautiful days in your countries also. So we will make a lot of pips with those strategies now. Okay, this was that example. Now we can move to another example, Chris.
Great.
Okay, this is a second NFP strategy.
Oh, by the way, sorry, just a quick question here from Stefan. Maybe it's regarding this last piece. He's asking, does this work both ways, both down and up?
Yeah. It doesn't matter. First, you need to see a big number, Stefan. You need to see a big number. You need to see a deviation from expected data release. You need to see deviation from that number. If the number has a big deviation after the release, then you will establish your bias. For example, you will establish that there is a risk off. Risk off means US dollar strength. So basically, we're looking to sell Euro USD because of dollar strength. And if the spike goes initially in short direction, you wait for the first swing low, then you wait for pullback, and then you enter. Or you can enter after the initial spike has been broken. It works both ways. You don't have to worry about it. You can test it. Just use the information we given to you, then you open your platform and you can backtest it. Flip the charts, backtest it.
We're getting a question here about the deviation, actually. What is do you have a certain percentage? And if so, what is the percentage of deviation to consider? Or how
Well,
much
for
difference
that,
should we
okay.
consider on average? Yeah.
For that sort of information, I can do it maybe on site, but for that sort of information, guys, use Forex Peace Army. That is a good website. They have a good info about deviations. So you can go to Forex Peace Army website and you can read about those deviations. Basically, now I will open and I can tell you the last, for example, the last one. Let me just click and I will tell you this month. Okay, okay, here. On the 5th of April, NFP expected number was 198K, and the number came 88K. I would have traded it long even if the number was 50K deviation. So if the number came 138 or 148, I would have still traded. So 50K deviation is very good. But you can also, I'm telling you, go to Forex Peace Army website about NFP trading and use their suggested deviations. It's easier for me because I've been looking at NFP last 3 or 4 years. So I have, somehow I'm accustomed to it. But what you should do is to go to Forex Peace Army and use their numbers. They're really good. Guys know what they're doing. So then you can apply this strategy. Also, previous estimation was, I think, yeah, 268K, and the price again came to 198K. So basically, those are really big deviations. But anywhere from 50K to 100K is okay. But as I'm telling you, go to Forex Peace Army and inform.
Goran is actually asking, let's see, I missed the question now. Oh no, sorry, someone else. Andre, what should be the position size in NFP trades?
Well. It depends of your stop loss. If you attended our last webinar about money management, you would have known that we base our entry size on stop loss. If the stop loss is 10 to 15 pips, you can go with aggressive entry. You can give yourself a little bit of leverage, But you know, if you want to trade NFP with, I don't recommend trading NFP with big stop losses, because NFP is not usual day trading. NFP is specifically traded on 1 minute time frame. So we are trading basically for 10 minutes, at the most for 5 minutes. So we don't use big stop loss. So basically, if the stop loss is 10 to 15 pips, you can give yourself a bit of leverage. But don't do that with, I don't know, maybe 1 point. I go with one, I don't know, maybe with 1 to 10 leverage at the most on 10K account. So I don't use leverage really. For example, on 10K account, I would trade it with 1 lot. I would really trade it with 1 lot, not more than that. So if it helps, it's okay. Don't use big leverage, but you can allow slightly leverage. But first, you need to get accustomed to this strategy, because NFP is traded only once per month. So you need to backtest it. Flip your charts and go and backtest your strategy. If it works, then you know what to do. It's not hard, but you need to get accustomed to. Any questions? Any more questions?
Just 2 more, and then we can go on. It's actually a question: how to know when is the deviation enough to cause a spike?
Well, go to guys. If it's more than 50K, it's enough to cause a spike. It's enough, really. If it's more than 100K, it's more than enough to cause a spike. But if you have problems with deviations, go to Forex Peace Army. You can Google it, Forex Peace Army, and you will see how they have their way of trading. I don't do that, but they have good deviations number, so you can use their deviation number. So just prior to NFP, you will notice, subscribe to their newsletter about NFP, and they will send you specific deviation when you can trade or not to trade. So basically what you do is, if you don't know what deviation is, for me it's 50K is enough. And if you're confused with that, go to Forex Peace Army. They will show you the deviation and what deviation is good for trading. Next question, please.
And the last one is, approximately how many candles do we need to wait to identify the initial spike?
Yeah, 5 to 10 minutes. Well, maybe it will go. Okay, how you identify the spike? You need to know basics of trading. What is spike high and what is spike low? We don't have predetermined time, but it can happen anywhere between 3 and 10 minutes. Usually it's I don't know, between 5 and 10 minutes. But you can see 1, 2, 3, 4, 5. This is 5-minute spike. This is 5-minute spike. And if it doesn't happen in, I don't know, 3 to 10 minutes, we don't trade it.
And you can see that after 2 minutes here, not breaking the high, right?
Yeah.
We already have, this is already a resistance spot.
Of course.
Yeah.
Of course. Of course. That candle, that spike candle has caused the price to establish a resistance, and then we have 2 bearish candles. So we know that this spike, this is a spike high. So after this second candle, after the initial spike, then we start to draw our fib retracement. You see, we need to be very nimble, very fast. This is news trading. This is spike trading. Okay, here is the spike. We wait for a pullback. First candle is bearish. Second candle broke that previous candle low, and when we see that, then we draw our fib retracement, so we know where to enter. It's basically it's not that hard, but you need to get accustomed to. Right, Chris?
Yep. Yep. Definitely.
It's pretty
like everything has to be practiced and trained before you get a good routine in it. Absolutely.
This is clear. This clearly was the spike. You can see that the candle went up, and then it was violently pushed down. And after the second candle, the price broke the previous candle low, and it started to retrace. We know we know that this is a retracement now, and we need to find our entry position.
And the definition is really wait for 2 candles to the left and 2 candles to the right. That's,
yeah, it's okay.
That's a fractal. It's called a fractal, and which is referring to a trader called Bill Williams, great trader.
Chaos trading, yes.
Yeah, chaos trading, and 2 left to the right, and then usually this is then then we have 2 minutes that you could consider this the resistance and put the swing high, swing low on this fib.
Yeah, so it's not that hard. Just you need to get accustomed to it. Wait for those 2 candles, then it will be easy. Yeah.
Yeah. All right.
Okay. And second strategy is called Bollinger Band strategy, and we place our Bollinger Bands with 50 period on 1 minute time frame. Then we put 2 exponential moving averages on our 1 minute time frame, and we put RSI 14 period indicator with 50 level on itself. Well, we put level 50 on RSI. So it's 14 period, and we just delete 70 and 30 levels, and we put line with level 50. Then, prior to NFP, we need to open 15-minute chart to see the prevailing trend. If you don't want, guys, to trade numbers, you want to trade on prevailing trend. And then, but on 15-minute time frame, not on daily, not on hourly, not on, I don't know, 4-hour time frame. We need to see on 50 minutes exclusively, just prior to NFP, 5 or 10 minutes prior to NFP. We need to know what the trend is. If the price is making higher highs and higher lows in succession, it means that we are bullish. If it's making a lower low and lower highs, then the price is bearish. So we do it on 15 minutes time frame. And then after that, if RSI is above 50, we wait for buy trade. So the other thing is, on 15 minutes time frame, if the RSI is above 50, we will go only exclusively for buy trades. As with previous example, we wait for a first pullback, then we enter on 513 MA cross, and we drive the price to upper Bollinger Bands where it will be our profit target. So you can Chris, you can show our slide so we can see how it's traded. Here we have already established on our red vertical line by this is 1 minute time frame, but we have already went to 15-minute time frame, and we could have seen that the price really was above level 50 on RSI. So we will wait. What we will wait for long entries. There is initial spike high, you can see that. Then we wait for a pullback and for the first cross to the upside. We need to wait for a red, this is 5 exponential moving average, to cross above blue line, and then we enter the trade. And then we can drive the price to above Bollinger Band or to 15 or 30 pips estimated profit target. Stop loss is put just below the lower Bollinger Band. So basically the structure is the same. We wait for initial pullback, we wait for the cross, and we can wait for 50 to 30 pips of the profit. So this is basically a couple of MAs with RSI indicator. If you are a fan of indicators, you can trade it like this. But I need to tell you that my favorite strategy is really this first one that I have shown you with fib retracements. I know that those crosses of MAs are lagging, so I don't use them often. But you can backtest this strategy and see, maybe it will work for you. If you're not that nimble, or maybe if you are, how can I say, a newbie trader, you would prefer this second strategy, because it's straightforward. Put a 50 period Bollinger Band, put 2 MAs, 5 and 13, wait for initial pullback, then wait for the MA to cross, and then you enter your trade. And just prior to that, you go to 15-minute time frame, and you can take a look if the price is bullish or bearish by RSI indicator. If it's above 50, it's bullish. If it's below 50, it's bearish. So for new traders, this might be the easier way to trade it.
So, and the entry you said is on a pullback, the first pullback.
Yeah, it's no. We wait for a pullback, then we need to wait for MA to cross.
Yes, that happens here, right?
Bullish, yeah, this is the cross, and we can enter on the cross.
Yeah. All right. So somewhere on this.
Yeah, on this maybe bullish
on this candle right here. Yeah.
And
so that would be either this one or this one. Yeah.
Yeah.
Probably this one actually. Yeah.
Oh, well, maybe it is, but you know, MAs tend to lag a bit, so yeah. We could have entered on this candle, yeah. But because it's 1 minute time frame, it's not that big. It's maybe 1.5.
It's a few pips difference.
Away. Yeah.
Yeah, exactly.
What's few pips
between friends, right? Yeah. Is there any relationship between the continuation or reversal of trend and good or bad news? Whether it is random or is there a rule?
And there is no rule. In Forex, guys, there are no rules. We can make our rules for our trading, for our mindset, but the market has no rules. We could have seen it many times. For example, last week we saw, a few days ago, we saw the price of Euro USD go to 32, then it dropped to 30 level. It was you know 200 pips up and 200 pips down. Well, you know, first thing is we don't predict. I can make analysis for this day, and my bias is based for that day, but I don't predict where the price will be. I need to react, and you all need to react. So when the price comes to the exact level, you react then. If you see that your analysis wasn't so correct, well, then you make another analysis and then you react again. So this is basically trading. There are no rules. You establish rules for yourself or your system for your trading. But you know, there is no how can you say, established rule to say if NFP would reverse the trend or maybe it would continue the trend. We are just based on facts. There are NFP that spike gives us on NFP, that number. After that, after we saw the initial market reaction, we can set maybe the bias for next week. This example was really good for this week because we had very bad NFP release. It acclaimed to dollar weakness and it drove Euro USD up. So, for example, position traders would just buy into dips. And it's easier for them because NFP has set this whole month for them. They will buy into dips and they will ignore short trades. I am a day trader and I can trade both ways. For me, it doesn't matter. I will sell into resistance or buy into support for example, on 15 minutes trend. But general trend is to look at NFP daily close to see whether the price will turn or continue to go in the same direction. And that thing Chris showed you a half an hour ago. So you need, for example, if you want to have your bias set for another week or two, you need to wait for daily close. And you can spot if there is a big wick on support, then we will have long trades. If there is a big wick on resistance, shooting star for example, or maybe an evening doji or evening star or dark cloud, we would have short trades after. So we just don't have a bias for spike trading. We need to be very nimble and very quick on our fingers.
Absolutely.
Guys, if you have some questions, just ask. We are here to answer.
The moving averages are 5 and 13
EMA. Yes, those are exponential moving averages.
Closes.
Yeah, closes. Yeah, always closes.
Yeah.
Yeah. So, if you want anything more to ask, yeah. This was not, this second strategy is not very hard. Maybe it's more suitable to newbie traders, that I'm telling you. And this first strategy is the strategy which I use. And, I have already developed a quick eye. So when I see the number, I just wait for that initial spike. If I am to trade, I wait for initial spike, then I draw retracement. It can happen in, I don't know, I need only 15 seconds to draw retracement, Just need to spot it, and then I click on Fibonacci Retrace tool, and I just connect to one low and one high, and it's pretty simple. Always from left
you
to right.
prefer the candle close, right? Instead of the entry.
Well,
or does it depend?
Well, I prefer candle close. Yeah, I prefer candle close. But more aggressive traders can go live candle, because if you can see this 1 minute candle, it just went to 78.6. And then it started to retrace. So basically, a trader could have entered just slightly above 78.6. But this is really the best risk to reward ratio for NFP trading. 71.6 fib retracement.
Yeah. So Manfred, that actually answers your question, because Toronto uses market orders in that case.
Yeah, market orders. Not
limit orders in that case.
No limit.
We have one more question regarding if these strategies work for Euro and cable on the same level, or it impacts more on Euro.
Well, it impacts more on Euro, especially because Euro is really a major currency against dollar, especially in these trading times. Maybe it won't be, I don't know, in next couple of years, but today really Euro dollar is really most affected. It was dollar yen, but I don't follow dollar yen on NFP trading. A year or 2 years ago, I think it was dollar yen which made most volatile movements. But I think for me it's euro dollar. not cable is not so much. Euro dollar is more volatile and more tradable than cable dollar.
Yeah.
You see, when you trade, for example, cable news goes always in one direction. In cable news, there is rarely those swings which can establish a trend. When there is a news release on cable, the price usually spikes violently up in one direction, one single direction. But you know, we cannot trade, I don't trade NFP that way. I need always to wait on retracement. And on cable, for example, when there is a huge cable news, Halifax report, or maybe Bank of England statement, there are no retracements. There are a big spike, 50 pips, and then usually what it does, it starts to go in that direction. So, you know, I don't trade cable, only Euro USD.
Let's see. Last webinar we mentioned some indicators, and the person is asking which they were. Well, we certainly mentioned fibs, I think, that's for sure.
Yeah, fibs always. But fib retracement is incorporated in MetaTrader standard platform.
Yeah.
So I don't know what sort of indicator you're referring to. Yeah, maybe we mentioned.
Maybe it was the fibs. What was it? I don't know what we were talking about. We were talking mostly about money management, so I don't really.
Yeah, money management. I don't know what sort of indicator.
4 indicators.
Interesting.
Four of them even. Well, I'll take a quick look in the PowerPoint. Maybe I can find something there. Let's see. How would you react to multiple key news on NFP days? For instance, last NFP had trade balance and unemployment data.
Well, basically, what I did is I just traded the NFP. Prior to that, I didn't trade at all. So I waited for NFP and trade solely that NFP, and I waited for really 15 points of profit. I'm not so, you know, so I just don't want to squeeze the market. I'm happy with 15 pips on NFP report. But when there are a lot of important news, my advice is to stay off the market. NFP tends to have a greater impact than trade balance. So if you encounter both news, you just need to know, well, NFP. But those kind of things don't happen every single Friday. So what I do is just concentrate on NFP. If the number is a little, or maybe not really, if it has a big deviation, then trade it. Just don't pay attention to trade balance, I don't know, unemployment rate or those kind of things. You can see that, well, unemployment rate was slightly better, yeah, it was slightly better than projected. But still, it didn't give any strength to USD. The trade balance was really better than expected. Expected number was minus 44.8, and it came for minus 43.0. So it didn't have any effect on NFP number. So what it matters the most is NFP.
Yeah, definitely.
Definitely, yeah.
Then we have one question about, let's see, how to take the best profit in the first strategy. So the one we're looking at right now, how to define the best place for take profit. But that's a fixed amount of, you're looking at a fixed amount of pips, right?
I'm looking for a fixed amount of pips. But if I spot, for example, the price is violently turning against me, I don't know, maybe it just goes in, well, you know, if stop loss is not big enough, and in this case it's not big enough, I wait for, I don't know, fixed 15 pips, and that's okay. But you can close it after 12 pips. I don't know, if you're happy with a profit of 10 or 12 pips, you can close it. If it spikes, I don't know, 20 pips, you just close it. Don't wait for more. So basically what I do is to see how many pips I will gain maybe after 5 or 10 minutes after my entry point. I don't hold trade more than 10 minutes after after my entry point. Usually. It can happen, but usually I don't. But
how about in this case here, when you would have taken the conservative entry, you would have, do you remember? You didn't take this entry probably.
No. Aggressive
No.
entry was. Well,
In this, what would you have done if you would have taken the conservative one?
I would really need to wait for the price to move up. You see, it jumped up after after I don't know 15 minutes. But for example, I would be stuck in a trade. In this particular example, I would be stuck in a trade because I don't want to close it for 2 pips, nor do I want to close it on 5 pips in loss. So basically, if I had taken this conservative entry, I would probably have been stuck in a trade until the price broke up. It would never hit my stop loss, but I would need to wait a bit more.
It's maybe.
Well, it happens,
10, 15,
market.
50 minutes or something like that, right?
Yeah, 15 minutes. Well, it happens, After 10 or 15 minutes, just take what you get. Because, market is not perfect. And we cannot drive the market. We can only follow it. And by following market, well, very few times it will happen that we will be stuck in a trade. And you also know when you day trade, for example, if you open, I don't know, a trade, for example, on the start of London session, you can get stuck until, I don't know, 1 or 2 hours have passed. It has happened many times. So you need to wait. If you get a good price after 10 good pips after 10 minutes, close it. If you are stuck, wait for 5 minutes more. Don't close your trade until the price has hit either target price or your stop loss. If you see that price is struggling to break that 10 pips of profit, it's struggling to break it, then close it, of course. You need to watch that, I don't know, 1 minute or switch to 5-minute time frame for the take profit. So you just need to see if the price is, for example, if I long that 3100, and the price is 3110. So I made my 10 pips, and the price is struggling to break 11. It goes to 10, 8, 7, 6, 5, then it goes again to 10 pips, and it cannot make that a pip more. I would close it. It doesn't matter. Maybe later it will make 100 pips, but this is spike trading, initial trading. So we don't base our intraday trades on 1 minute time frame. You just scalp it, scalp the news. Yeah. That's it.
Then we have a question from Ayas. If it's possible to draw the fib before the data release, or really have to draw after the data release?
After, of course, after.
After.
I was telling you, maybe I was really telling you a few times in this webinar. You need to wait after the initial spike. You cannot draw fib on past information. It's a past. We need to see initial spike. Because NFP can reverse the market. We need to see the initial spike, always after the news. Yeah, do we have any question? Any more questions?
Well, that's about it, I guess, so far. So that's great.
So guys, if you ask me, go after this webinar ends or when you have the time, try to spot NFP days, try to spot daily time frames so you can see what the price has been doing after the day close of NFP. That's what Chris was telling you. And then if you want to see how we get to specific trades, go to your 1 minute time frame, mark with horizontal line the start of NFP. It's 12:30 at Central Time, 1:30 GMT, and it's 8:30 a.m. Eastern Standard Time. Mark it on your charts, then see the initial reaction, and then you see the price movement. But don't forget, we only trade when deviation is big. We don't trade it when there is no or little, or when the deviation is light. Yeah.
Yep.
So you can always try our investment games. You can like Admiral Markets on Facebook, on Twitter, because this is all been organized by Admiral Markets. I'm an outsource. My personal account is on Admiral Markets, and I have been doing good job with them. I'm really happy how the platform works. And so guys, just you need, well, another thing, well, you see, when you have account, I don't know what broker you use, but you need to have a good broker for NFP trading. This is most important. You don't have to, you just avoid if there are requotes, if there is a big spread, because some brokers will give you big spread on NFP. If the spread is bigger than 2 or 3 pips on NFP, guys, don't trade it. Admiral has been very good because the spread on NFP is not big. So you can trade it. It's basically the same. On Wanda, I think there is 20 pip spread. So it's untradeable. So pay attention to that also. Yeah.
Yeah, that's a very good and very important point. Absolutely. Yeah. And Godly, the video recordings actually of previous webinars, I was told will be posted next week. So just a bit more patience there, and then they should be all available, and you can watch back any one of those you want. So coming soon. Should be there by next week, next webinar that we will have together. I think next week we'll have another one at the same time, of course. Mm-hmm. Just wondering which one it is. Do you know it by heart?
No, by heart. Well,
take a look, actually.
No, I will tell you. I think it's about divergence or something, right?
Yeah,
divergence,
you're right. Yeah. How to trade divergence. Very important.
I trade it really. I prefer divergence. Yeah, you will see how I trade it. One of my favorite styles for trading divergences.
Yes.
So you guys, you will get exclusive right to see how divergences are meant to be traded. Just
yes, exactly.
Just forget that chit chat and tell tales about divergence. We will show you how to trade it.
Very interesting.
Very interesting, yeah.
And actually, Shashi beat us to the answer. Trading divergence, knew it before us. That's great. So yeah, we're looking forward to that too. That's a week from now.
Yeah.
And yeah, I guess we'll be closing this one for now. But we wish you a great weekend and good trading.
Yeah, we wish you guys a great weekend, good trading, and be with us on our next webinar, how to trade divergences. Cheers.
Yes. Cheers, guys and girls.
Yeah, and girls. Bye-bye.
Bye-bye.
The organizer has